This is Brad Wolff, and this is the Emini review for August the 2nd, 2022. As you can see, Al marked on the chart, we had a wedge top and midday reversal. Here's bar 40 around here, and we had a midday reversal down. And on the open, we sold off and formed a wedge bottom, and we rallied for a couple legs, forming a wedge top that got an endless pullback and a bear breakout, which led to a midday reversal. We had a leg up in a trading range in what turned out to be a leg down in a trading range, and the market closed around the open of the day. On the open, the first couple bars were sideways, 5 to 6 bars down. That was an indication that we may have quite a bit of trading range price action. Also, as strong as this rally was, it had consecutive sell-buy climaxes, which increased the odds of more sideways. This was strong enough to get a second leg up. However, especially when you got the bear major surprise or the major bear surprise, that was a strong enough breakout to test the open of the day and keep the market sideways. And you can see once we had 2 to 3 bars down, Al marked sell signals below this bar and below this bar. Traders that sold below it, they might have been disappointed on this bar. They might have, well, they wouldn't have entered here. Traders that sold below this bar, if they were disappointed, maybe they scaled in lower, maybe they got out back at break even. But either way, this bar warned traders that the market was likely to go sideways, maybe a little bit more down, but traders were scalping. So the next signal below this bar, if traders sold below it here, sold below this bar or below this bar, traders would be quick to scalp out, especially since we had a bear breakout below a wedge bottom. We had a reversal up. Traders will buy above this. They'll buy above that. Consecutive bull bars, probably buy the close going a little bit higher. They'll buy here, and they'd even buy here. It's basically a micro channel. This is a high one buy. It's a reasonable buy. Probably going to test the open of the day. They'll buy above this bar. They'll buy above this bar. This was a breakout above a minor parabolic wedge, which is here, 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 and here. The market had a minor reversal, a couple of legs down. If you go to a smaller time frame, it was a small parabolic wedge and a test of the bar 1 high. And traders would begin buying again above bull bars closing on their highs, maybe above this bar or above this bar. And they could have bought above this high. However, it's a possible wedge top, 1, 2, 3, and a double top here. So that is why Al marked this bar. It was a breakout, pullback, buy. So in other words, it was a breakout above a double top. Traders could buy here, here, here. They'd even buy above this bar up here, or one of these II patterns. Traders buying up here, they understand that this is extended, and they'll be quick to get out as the market starts to go sideways. And especially with it being around bar 40, which is often a midday reversal. Here, we had a micro channel down, and when you get that, we tested the moving average. Bulls could not form a strong signal bar, and the bulls gave up on this bar. So traders that were buying, betting on a pullback, even though this was a wedge, 1, 2, 3, the odds were they'd get a second leg down. So a lot of traders would give up below this bar or below this bar. By here or here, it became clearly sell to close, and traders would start selling closes. They could sell here, below this bar, below this bar. Most would not sell below here. It was a breakout below this, and the odds are it might have been a final flag, and we'd get a test back up to the moving average, plus your red obvious support, the open of the day. Traders could buy here, or they could wait to buy above this bar as it triggered right there. Strong enough breakout, probably a second leg. Those traders that bought now have a wedge, so they'd be quick to scalp out. They could get out below one of these bars, below this low, or below this low, or even on the breakout pullback short here, betting that the market would at least go a little bit lower, maybe below this low. Traders could sell here. If they did, they're betting on a bear breakout below a wedge, 1, 2, 3. if they did sell this breakout, they're going to be disappointed by the follow through, and most, if they're fast, would get out. Worst case, maybe worst case above this bar, maybe around break even as the market turned up. A lot of traders that sold below this bar, they want quick resumption down, and when they don't get it and it starts to stall, they give up and take a small loss. Traders buying here, same thing. They want the fast breakout, disappointed, and they give up quickly. The traders that waited got out below this low. Some started selling the close late enough in the day that most traders shouldn't sell. When you have this kind of a breakout, the odds are it's going to cause the market to go sideways to down. This has enough influence to cause influence over the next couple of legs down. If you found this video interesting, you can go to brookstradingcourse.com and find out more information. Thank you.